could you share your, again, not financial advice, but perhaps some thoughts and intuitions as to what a optimal pulse chain strategy might look like? For example, I know you mentioned accumulating some hex. Does it make sense to maybe go more towards hex, some stable coins, a mixture? And then when pulse chain launches, what's your kind of pre-bridge, post-bridge thoughts? Can you share some thoughts as to your whole take as towards a strategy towards pulse chain mainnet?
Yeah, it's a lot to unpack there. So with the stable coins, right? So stable coins, there is no risk to the downside, right? There is no risk to the downside, but there is obviously risk to the upside. So you have to see, you have your cash right now. You can either leave it in stable coins or you can leave it in liquid hex. Now between now and the pulse chain launch, is your hex going to be worth more or less? And I'm saying your hex on Ethereum plus your hex on pulse chain, right? Than what it's worth now. And I think more. So I say it's advantageous to be in liquid hex as opposed to, USDC or another stable coin, because there is risk to the upside holding stable coins. I think you're going to have more buying power because you're going to have a higher US dollar value on your hex when pulse chain launches. So I think I'm definitely more heavy in hex, right? To buy pulse and pulse hex in comparison with stable coins. Also, the liquidity provided for hex, the hex and pulse pair, and the hex and pulse X pair is going to be a lot. There's going to be a lot more liquidity. You're not going to be facing slippage, and probably your copy is going to have a lot more, buying power for pulse and pulse X. So I think it's a no-brainer holding liquid hex as far as that. I guess if you're short hex, between now and launch, then hold USDC. And then once pulse chain launches, you are going to be able to sell your trade your P hex for pulse or pulse X, and you're going to be able to then trade your E hex for pulse or pulse X, right? So that's the thing to do. Now, should you do it all at once, or should you dollar cost average? This is what I talk about with a lot of people that work with me one-on-one. So, it's going to depend on the ratios. It's a lot of people are all or nothing too frequently. You can't be all or nothing, folks, right? So you have to, some of it you want to get exposure to on day one, and some of it you want to DCA. And I think that depends on the ratios. I think if you're getting, so what are the data points we have to know what are good ratios or what aren't? We don't have good data, but we have data, and that data is really the price of EHEX and the sacrifice rate for pulse and pulse X, right? So if you divide, let's say you divide the price of EHEX right now, which is at 6 cents, by like 0.0001. Then you get something like maybe 500-600 to 1. I don't know what exactly is. So if you get 500-600 to 1, you should probably go heavy on day one, right?
But I think a hex to PLS, you're saying?
Yeah, I think you should. If you could get 600 PLS for one hex, I would consider going like 50-60% in on day one. Why? That's amazing. I think that sounds incredible. I think 300 is also acceptable because you have to consider there being a price appreciation, right, of pulse from sacrifice. So let's say it doubles, or let's say you get 200. I think 100 is even acceptable. But I think if it's like 100 or less, you would want to maybe go in 10 to 20% on day one in the DCA. So I think it's a complex thing. Everyone's different. It depends on what coins you're more bullish on, and it depends on the risk you want to take. But I think that's a basic idea. That's my basic framework that I work from. If the ratios are good, meaning you're getting in the hundreds, to mid hundreds to thousands, you could go all in on day one. I think that's not there's nothing to be ashamed in that. But if the ratios are bad, you would want to go in less. So you want to maybe go in like 10 to 20%. But still, you want exposure. You want exposure for your mental health. And you don't know. They might seem bad, and they might seem bad, but only get worse. So even if it's 100, 150 to 1 and you don't like it, it might go to 50 to 1. Who knows? So I think you need to. It depends on each person individually. This is what I do in my one-on-ones and things like that. But it depends on each person individually what they want, and which coins they value more, and which sacrifice they get into, and the risk they want to incur. But that's the overall framework I think that people should have within their approach to ratio trading. I don't know. What do you think?
I think that's a great point. I think what you're essentially saying is let the market tell you what to do, in the sense that the better a deal you can get, like you're just describing. If you have so right now at the time of recording or whatever, you have a current ratio on the test net of 1 hex gets you 48 pulse chain. But the greater that ratio gets, if you get a 1 to 100, a 1 to 300, the more that ratio, the more extreme that ratio gets, gradually the more and more it makes sense to take advantage of that ratio. I think that makes a lot of sense. Now, for the people who want to learn more about some of the services you provide, you want to just give a quick shout out as to I can even share a screen. I have your website pulled up here, but do you want to give a quick shout out, a quick breakdown of some of what you do with helping people out?
Oh yeah, thanks, man. I appreciate that. Yeah, so I have a Patreon, right? So that's 20 or 30 a month. You get weekly meetings with me. You get DMs, I think, in the 30 a month. It's very, very cheap. And you get a lot of value, and you get to ask me questions during the meetings, and there's courses. So we have courses. We started from Bitcoin. And even though Bitcoin, I'm not so bullish on it as an investment, it is the cornerstone to understanding, blockchain technology and crypto, and therefore being a good investor. So we started at Bitcoin. We worked our way to Ethereum, DeFi, decentralized exchanges, then getting into Hex, Pulse Chain, PulseX, and we just do them. Me and the patrons, we do it like every week, every other week as well. I want to maybe even do 2 courses this week. So we're going to work our way into, taking profits and, looking into crypto. So all that good stuff is in the Patreon. And also I do one-on-ones, if people want to do a more personalized, I guess, more personal session, where, we could delve into your personal situation. Even though I'm not a financial advisor, I do that on the web. You could book that on the website as well. So that's really my business right now. I would like to make a course. I'm working on that, but it's not really out there, like a course that just goes through not only like lectures, but also like tutorials, walking you through everything. So like, I want to kind of just be a one-stop shop where you don't have to go elsewhere, really. I mean, it's always good to have different sources of information, and I would never say to only look at my course and things like that. You can look at other courses, and you can look at other, content on the web. But I would want someone to be able to use my products and in a short period of time, be completely fluent in blockchain technology and be able to use all protocols and things like that. And that's really the goal, and we're working on that right now. So that's really what I'm doing. Yeah, and I'm proud to say I've been doing everything in terms of my monetization the ethical way, never taking money to shill projects, although I've been offered many times. Never encouraging leverage trading, all those things. So the business is very within the principles of the ecosystem we're in, and it will continue to be that way. And if I can't make it profitable and not worthwhile, then I'll get a job. I'd rather do that than sort of use my my following as a means for me to make money by like shilling things that are scams and things like that. So yeah, that's really, I'm very proud of that, and hopefully we could grow it.
I hope so, man. It's really good shit, because look, personally for me, one of the ways that I've become very familiar with a wide variety of different areas is I buy courses personally all the time. One of the things that one of the ways in which I became competent in technical analysis is because I purchased a course, right? I've purchased courses for a bunch of stuff. I purchased a course to learn what it's like to start an investment fund, a hedge fund, plenty of technical analysis courses. And so look, if you can afford it, great. It helps out not just yourself in that the stuff with a lot of courses, and I'm sure you might agree with me, A lot of this stuff can be found online, but it can be found online over the course of like a year of you
Yeah.
having to sift through stuff and sort out what makes sense and what doesn't. But to have the ability of go to one place and in a much shorter period of time get exactly what you're looking for, I think actually is a tremendous value. And so not only does it help out, content creators like yourself who are providing great value, but it also kind of serves as like a kickstart to your personal understanding as well, where you could take the next 6 months to try and figure something out, or you can do this and understand it in an afternoon kind of thing, right? So yeah, for a lot of people, if you can't afford it, I always recommend investing in your own education.
Hey, yeah, we broke the ceiling. We going from broke to billions. Sex up next, we plotting the pump. No vex for a hex, we locking it up. Post chain, no, we not in the rut. With a heart like Richard the Marcus, we best. I'm a day one sacrifice, we guess. And we going from broke to bees, we invest. Crypto, we grow with ease, we impressing. Free game.